property market forecasts for 2023. In this market insight, we take the opportunity to share our perspective on what the year ahead will look like in the Melbourne Victorian residential property market. What happened first up in 2022? The property market in 2022 commenced the first half strongly, with many suburbs entering the $1 million median house price. Buying activity continued with demand heavily outstripping supply. There were many underlying reasons for this, but the Melbourne market continued its upward growth trends. Entering into the second half of 2022, we witnessed unprecedented interest rate increases that occurred for consecutive months. With the Reserve Bank of Australia seeing increased inflationary risk, the government took a strong stance to curb the rise at all costs. This caused the property market to cease its upward growth as demand promptly retracted. Many buyers, including owner-occupiers and investors, took a backstep to wait for interest rates to hit its new norm before purchasing. Property supply continues to drop, which has partially enabled the property market to hold its recent gains. Many areas in both metropolitan Melbourne and regional Victoria witnessed falling property prices. Vacancy rates have, however, reduced to record lows. Many landlords saw their vacant properties rented out in weeks, days, and even hours from listing. It is evident that property affordability remains the issue in the economy, with rental yields increasing given interest rates and lower property supply. As we near the end of 2022, Victorians voted Dan Andrews in another 4-year term, while the RBA indicated that they will closely monitor the retail spending throughout the Christmas period. There is a 50-50 chance the RBA may implement another interest rate increase if Christmas periods add further pressure to inflation. Once inflation has become sustainable, property buyers will be in a great position to understand their borrowing capacity and look to purchase in the near-distant future. The property market forecast for 2023. At Crest Property Investments, we have the privilege to oversee market trends, buyer activity, and have access to various research information to be able to check what is happening in the market. As the state and federal government work towards recovering the economy from the wake of COVID-19, the year 2022 showed both ups and downs. In 2023, we enter a new year where we anticipate an increased activity from property investors as opposed to first-time buyers or owner-occupiers. No one has a blue crystal ball, as there is always unforeseen events that will arise. But here we outline some of the macro property trends expected in the year 2023. Number 1, vacancy rates. There will be continued shortage of properties to lease. Property investors will be enticed with the fact renting a property will be easier than what it has been seen in the last 7 and 10 years. 2, immigration is increasing. As the COVID lockdowns continue to ease, we are already seeing an increased overseas travel occur within Australia. We believe Australian immigration will pick up early next year, with Melbourne being one of the likely sought-after locations. This will increase the demand for housing in both buying and renting. Number 3, shortfall in property supply. This trend has been witnessed over the course of the last 12 and 18 months. With the cost of construction increasing and the cost of credit, developers have not been putting new properties to market as they have historically. In general economics, when supply outweighs demand, it places upward pressures on property prices. Number 4, unemployment rates are low. Unemployment is historically at a low level. This means many are earning a regular income. With wages growth occurring, this will enhance further buying into 2023. 5, household balance sheets. No doubt interest rates increasing in the second half of 2022 has caused a number of cash flow concerns and problems for buyers. Many households also have good balance sheets with adequate cash flow buffers. It is estimated that there is over 250 to 260 billion in aggregate savings nationally, most held within offset accounts. Number 6, many borrowers are ahead on their mortgage repayments. The CEO of the Commonwealth Bank recently announced 3/4 of their loans are approximately 2 years ahead of payments. We understand not everyone is in this situation, but this demonstrates many households may want to enhance their wealth by buying and purchasing additional real estate in 2023. 7, government stimulus packages. The government, both state and federal, have provided many incentives to encourage first home buyers into the market. From the 1st of July 2022, 40,000 new places under the federal government Home Guarantee Scheme will become available to help Australians buy their first own home. What to do next? In the year 2023, sensible and strategic planning will see you find some great investment value in the market. Seeking professional advice is the key to your success. If you have developed adequate equity, this may be an incredible opportunity to enhance your wealth and take the next step to reaching a successful retirement. If you'd like to learn more about buying an investment property, please don't hesitate to contact us. We welcome the opportunity to help you make your next property purchase. Our YouTube channel and market insights on our website is also a great place to find a wealth of information to assist you with many areas relating to property. You can learn more about our service at www.crestproperty.net.au. Thanks for listening.